Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and with me today the members of the jury of the Business Today Best Banks and NBFC Awards, an award that is one of the oldest in the industry in India and with the knowledge partnership of KPMG. This award is going to be put out and release the details towards the end of March. But with me, members of the jury, Mr. Anand Kumar Sinha, former Deputy Governor of the Reserve Bank of India, the chairman of the jury this year. Also with us, Pallav Mohapatra, the CEO and MD of RSIL Limited, the former MD and CEO of the Central Bank of India. With us also NS Kannan, former MD and CEO of ICICI Prudential Life Insurance, former ED and CFO of ICICI Bank, independent director on various boards including Wipro and NABFID, and Rajiv Kaul, Executive Vice Chairman, CEO and whole-time Director of CMS Infosystems, former Managing Director of Microsoft's Indian operations. Welcome to the panel here. I'm going to start with you, Mr. Sinha, because we are not going to give out the details of either the jury deliberations or who have been picked. That, viewers, you'll have to wait for the actual formal event and announcement. But this discussion is being held in the backdrop of the India story getting so much traction globally. And the banking sector, including the turnaround that we have seen reflected in the stock prices in the public sector bank and the private sector PAC also doing extremely well. How would you describe the overall health of the banking ecosystem in the country at this point of time?
Banking system and NBFCs which are regulated by RBI, they are certainly in a much better position than what they were a few years back. Partly because we had a very large NPA problem around 2015-16, and also after that we had COVID. So all this had put a lot of strain on the banking system, but after that we have been able to come out both with the help of capitalization of public sector banks as well as improvement in regulatory policies and more intense and more risk-based supervision. So we are in a good space, but financial sector is something where you have to be cautious all the time. Mishaps will happen. It's very difficult to imagine a financial system where mishaps do not happen. For example, the latest case that we have is of Paytm Bank. So what is needed is better appreciation of risk, constant vigilance, and evolution of policies to meet the new challenges, and very much, in fact, most important, a very incisive supervisory regime. So this is how I'll sum it up. We are in good position, but we can't afford to be complacent.
Well, that's a very good point, because India is the world's 5th largest economy and the fastest growing. The whole world looking at India, and one of the key things is the banking sector and all that's been done in the last 5-10 years. Mr. Mohapatra, I want to continue with that point. One of the key significant reforms that has led to an overall change in the culture with regard to lending and borrowing, obviously, is the IBC, the NCLT framework and the resolution that we have seen. Lots of successes, but lots of things still stuck somewhere in a busy traffic red light, I would say. Given all of that, do you think we've done as well as you had yourself expected some time ago with regard to resolution, because that is one of the fundamental things with regard to the overall banking cleanup?
Yeah, so the various instruments which the regulator brought in and various legislation which government of India brought in, that has helped not only the resolution of the stress assets, but also the mindset of many of the corporates. Now, the default on the part of the corporate, they have to think twice before they default on that. And many cases we have seen in the IBC process where the moment the Section 7 application is filed by the lender, they want to get back to the lender that they want to basically settle the account. So this is number one part. Number two is I will give full credit to both the Government of India as well as Reserve Bank of India. See, if the asset quality review had not taken place in 15-16, the actual stress in the banking sector would not have come out. So that was the first step which was taken, and then basically acknowledging that this is the problem, and then the solutions were brought in. I have seen the trend as a banker, and the way RBI strengthened and made the regulation and the supervision very tight, like the prompt corrective action in case of the public sector banks. So that was the right step at that moment of time. But at the same time, Government of India kept on doing the recapitalization so that these banks do not fall under the various parameters which are basically seen by the international agency. One parameter is capital adequacy ratio. So, and you, from the bank I am coming, where it was and where it is now, even from the capital market perception. So this has improved a lot. Even in the industry I am working now, there also I am seeing the regulator, the supervision was not that rigid, say 2 years back. Now the regulation has become rigid. Now even in case of the asset reconstruction companies, they have introduced the SSM system, which was only for the banks. Most probably they are going to introduce the SSM for the NBFCs also. So what RBI is looking at is that they don't want the risk to build up. So now RBI is taking a lot of proactive steps, like in case of unsecured, when they saw that most of the lenders are basically building up the unsecured retail segment. So they came out with the regulatory provision. They didn't say that don't do it, but they came out with the regulatory.
Absolutely. So effective banking supervision, also one of the things that perhaps doesn't get covered in mass media, but very, very fundamental to the turnaround. Mr. Kannan, I'm coming to you because there's a whole technology, fintech piece that I want to take up with Rajiv. From diagnosis to treatment, if you were to describe the last 10 odd years as that process and what Mr. Mahapatra also said, what is the health of the patient currently?
I won't call the person a patient at all. So let me start off with that, because there is no patience here. It is a very thriving economy. It's a very thriving financial services sector. And patients are identified much before they become patients. And that credit I'll have to give a lot to the regulators. So if you just look around the financial services sector, say SEBI, RBI, IRDA, PFRDA, if you look at the top leadership, I mean, I don't want to name the names, you know all of them, people of impeccable integrity and phenomenal competence. They have been appointed at the right positions. Either they have grown through the line or they have been appointed. So I think they have been extremely proactive, very focused. So to that extent, I think we have matured to the extent that any problems are identified well ahead of time. For example, we talked about the unsecured loans. The signal has been given, watch out. And banks are also on their own focused on looking at provisioning, looking at the credit aspects, and they become much more mature in the 10 years to answer your question. So a lot of things have been done at the macro level, economy as well as financial services sector. Having said that, we should not be complacent. What is required probably is understanding that cycles will come. See, financial services sector and the technology, fintech related sector is such that cycles will happen, cycles will come. So how to continue to be resilient? I think as a macro level, resilience is very much there as an economy. Government has done a lot of work, regulators have done a lot of work. At the micro level, that is institutional level, you should focus on the balance sheets. When the time is good, make provisions. Make floating provisions so that in bad times it can come in handy. Technology, a big area of risk. Technology reliability, technology resilience is very critical. Cyber attacks will be there. How do we sort of build fortresses around it? It's what we'll have to focus on. And people, leadership ultimately is important. I talked about the regulatory leadership. Similarly, at the micro level, institutional level, the leadership requirement is there. How to pass on the leadership to this generation, next generation, how we are grooming the leadership. I think technology, leadership and balance sheet resilience. Resilience on all these three aspects is what is critical. And in good times, we will have to be doing it so that on the bad times, we don't become patients or we don't suffer as an economy.
That's a very good answer. Rajiv, technology being a key differentiator increasingly in consumer adoption of even traditional banking. And add to that what the fintech space has done. I want to focus on the fintech space because technology is the key differentiator there, an explosion of fintech companies over the recent past because of the funding winter. That model, parts of it have come under severe stress. What's your own assessment of the fintech space in India at this point of time?
Well, I think the fintechs have played a very key role in driving adoption of new business models, which would have normally not got done by the banking empire, as I would call it. What this has led to, and which I said long ago, I think the platform in India is the large banks. I think the last mile reach and access is through the large banks. We've seen the last decade where almost 100 million Indians have got a bank account and slowly are getting access, slowly still getting access to credit. And that's, I think, the opportunity for India, which creates the next decade of growth, where consumers with access to credit in a sustainable manner can increase the per capita income, which leads to consumption growth. And we are still a 2/3 economy linked to consumption. And I think the fintech innovations which have come in there, we have seen a lot of it in the payment space. But beyond payments, we have not seen that scale to the last mile and access. So but the work which RBI, NPCI and some of the leading fintech companies have done has accelerated the technology use and brought the cost down significantly. The next wave would really be if the large banks, and I mean the State Bank of India, ICICI Bank, HDFC Bank, Punjab National Bank, Bank of Baroda, Axis Bank are able to use this technology access to start offering last mile credit at a much cheaper transaction cost and recover this money in a manner which actually enables 100 million Indians to improve their income level. Because if you can add leverage to your personal balance sheet slowly in a sustainable manner, you will start and be able to pay for it. I think that's where the whole country sort of goes up. So for me personally, the impact of this has to be seen at the financial inclusion level. And I think that's the opportunity which I feel very positive about in the coming decade.
Quick follow-up. What are the innovations in the fintech space, generally speaking, within its various verticals, that the large traditional banking system ought to pick up in India? Quick answer on that and then we'll continue.
I think the fact that we have seen the way credit has been disbursed at not consumer but at least at MSME level, and the data, the way the algorithms have been made to work, I think if that can be taken to the next level of consumers, and that only the large banks can do. I don't see the fintechs being able to do that. If that happens, I think we will be able to see a very profound impact.
You wanted to come in on that?
Yeah, I'll just say that one of the examples to answer your question could be the end-to-end lending. Where banks have a rich source of information residing in them, transaction data, everything is available, and that is being used for end-to-end lending by pre-selecting, analyzing, upselling, cross-selling. I think some of this has come out of that. I think one of the biggest benefits of fintech, to answer your question, has been nudging the incumbents to up the game. I think that is very much happened.
That's a very good point, and I'll go to the banker here on the panel and then the regulator for the final word on this. One of the observations that all of you must have also come across is that newer companies in the fintech space, in NBFC space, have pushed the envelope, introduced newer products and newer ways and made it easy for the consumer. There are risks attached with it. While as traditional banks take time to reorient their systems, and I'm not making a distinction between public and private. Do you think the overall banking system has some lessons to learn from the younger upstarts, so to say?
Yeah, I totally agree, and I think now the leadership in the banks, I've seen in the public sector banks, and this must be there also in the private sector banks. They have acknowledged this fact that if they have to be in the game, then they have to focus on the technology. Not only the technology on introducing new products, technology even in the compliance, technology even in case of the risk management. Because manually, now things cannot be done in a I will say near perfection level, because whenever there is more of the manual intervention, the possibility, number one, of error goes up, and the possibility of something going wrong is also there. Now just think of that we are talking about the banks and the NBFCs basically adopting new technology. Now the ARCs are adopting new technology. The ARCs are basically putting up the platform where he's talked about the end-to-end. They are also looking at end-to-end. That means if they have to acquire large portfolio of the retail assets, there will be lakhs of accounts. Now they cannot do it manually. And if they have to basically put a pricing on that also they cannot do it manually, whether the system can do it. Even in case of the ARCs, it is not only the data analytics, it is not only the acquisition pricing, it is not only the resolution mechanism, it is also they are looking at they have to have the CISO in the system,
Right.
which never was thought of in the ARC. They have to have this SOC, which is basically where the security aspect is seen. So that should be fully operationalized. There has to be information security audit of in the ARC. That is the level where the technology has gone to.
Right.
So if the banks or any financial institution, they do not adopt and they do not learn the lesson from the past, they will be laggards.
Mr. Sinha, the point that Rajiv made, focus on MSMEs and the consumer point of view, I want to take that forward. Has the recent past also sort of given us opportunity to look at the fact that unsecured credit has grown, the regulator has responded, and in some ways technology has made it so easy that it's at a touch of a button. Is there therefore need to refocus in the manner that Rajiv is saying, and do you see the need for a more evolved regulatory response?
See, regulation in any case is not static. It has to respond to the evolving situation.
Sorry to interrupt you, but sometimes regulation is blamed for waking up a little too late. I don't want to talk about specific instances.
No, that is right. That is right, because let me put it in the context. If you look at the developments, regulatory developments, I would put it in two broad categories. One is there is an innovation in the market, maybe by banks, NBFCs or other players. And when it starts acquiring a scale, then you have the regulator coming in, because inevitably and problems do develop. You have consumer complaints and all that. So then the regulator has to come in, and also if the regulator feels that this is acquiring a scale where it can pose a threat to the system. So that is one. There are certain other innovations where the regulator itself leads the banking system, in the sense that it's not there in the system, but the RBI or other regulators want to introduce that. One example which readily comes to my mind is credit default swaps. There was not much of a market, but the RBI came out with guidelines and encouraged the entities to go into that. So this is how it works, but by and large I would agree with you that regulators are more in the chasing game rather than in the leading game, and that is something which needs to improve, in the sense that regulators have to be conscious of the developmental risk, developing risks. And I can give an example. Before that, let me put it this way: there are risks that traditional risks almost everybody is aware of, but the damage can happen if there is a correlation between those risks and you are not aware of the correlation. For example, Silicon Valley Bank, they had a huge government securities portfolio. Now, who will imagine that a bank having a huge, extremely liquid securities will not be able to meet its commitments?
Because of a once in a lifetime kind of shift.
No, not only that. Because of the fact that they had very large, almost 95% of uninsured deposits, which can flow away any time. So it needed more stability in its asset portfolio. Now the entire HTM portfolio was not marked to the market. By definition, HTM is not required to be marked to the market. So when the pressure came, they sold off, and in the process booked very large losses. So it made the position of the bank worse, and this went into a downward spiral. So a bank's board should have been conscious of the fact that they are very vulnerable in the case of a crisis because of a very large percentage of uninsured deposits, and they had a portfolio which given certain situations, and why it happened is because of inflation in US, the interest rates had been raised, resulting into large mark-to-market losses, and the portfolio was not marked to the market. So the point is that one has to be very aware of the risks, not to be seen in a silo. also be aware of the interaction among different kinds of risks, and also of new risks emerging because of the development in technology.
Absolutely.
So this is how you can deal with the situation, and of course this will require a very educated leadership in these matters, both within the regulators, and I would say even more so within the banking or the other financial sector entities themselves, because they cannot outsource their risk management to RBI or to SEBI.
Absolutely. I recently met a banking CEO, and he told me that the maximum time he spends apart from statutory compliance duties is on the bank's app to keep figuring out if things are okay. The final round of questions, and this aimed more for our consumer, because I want to ask this entire panel about who will win the race in banking in India. Now that's a very general question, but starting with you as the technologist, so to say, you spent a lifetime in technology, and now you of course work with the entire financial ecosystem as well. Who will win and be the leader? Will it just be because you have a very large customer base, asset base, you keep your NPAs in control, or will technology be the key attribute between the winner and the loser?
I feel the incumbents, one of the top three incumbents, I think all three incumbents would really last out the whole next 50 years or 60 years, which I don't think the new technology companies in fintech would be able to compete at all. I think the technology adoption has had a massive thrust in India thanks to UPI and other things, and I think that differentiator is now, there is no longer a differentiator. I think most people at the top are very close to each other. So I think the current large established banks who have proven themselves over decades have a long way to go. I think they'll do very well.
Mr. Kannan, old war horses always win, although younger ones may do a fast sprint, but ultimately the old war horse wins. Is that what Rajiv is telling us?
So as I said earlier, the new horses will push the old horses to up their game. That will definitely happen. So rather than asking a particular incumbent or a new entrant who will be winning, I would talk about the attribute which will win. I think to me resilience is the most important attribute. Mr. Sinha talked about the risk of the Silicon Valley Bank. So the next risk cannot be predicted. Whatever you have all the bases covered, that will not happen as the next big risk. People thought that credit risk is the one which will kill the bank. Here it's the interest rate and liquidity risk kill the bank. Or COVID, nobody knew that this kind of a pandemic will happen.
And this applies in the Indian context also.
Exactly. You know, next risk is not something where you have bases covered. Next risk is something which is unknown. Otherwise, it can be handled, it will not become a risk. So to keep your operations resilient, essentially through technology and people, I think whoever has got this act together will be the long-term winners. That is my long answer to your short question.
Mr. Mahapatra, that same very question to you.
Okay, my answer will be on the 3 points. If the financial services sector or the banks or the NBFCs are nimble-footed on the technology, it is not upgrading the technology, how flexible they are, how fast they can basically adopt the new things which are coming in the technology, how they can change, number one. Number two is definitely the size, because the size has got the money power to basically support that. And number three, which if any financial institution is focusing on these two, but is not focusing that much on the risk management, they may lose the game in the longer run. Because the game is how sustainable you are, how much focus you are giving on the regulation, how much focus you are giving on the technology, and how much you are basically focusing on the risk management. If these four are combined together, I think it is very difficult to defeat that particular bank.
Mr. Sinha, that same question with the added final one as the chairman of the BT Best Banks and NBFC Award jury for this year. If the banking regulator were to hand out licenses to pure play technology companies, would my other panelists here change their opinion about who will win the banking race?
No, not at all. And I have a reason to say that. I don't imagine a new entrant to leapfrog so much that they can overtake the established players. And the basic reason is this, that very fast expansion. First of all, it induces many weaknesses. I mean, this is historically proved, and the regulators, for them, the red flag goes up. So I imagine that among the largest 2-3 players, they have the chance, not the new entrants. New entrants will take their own time to scale up. But here I would also like to point out that if we are looking at from a broader perspective, not only from the Indian perspective, and if we have to fulfill the dream of becoming a developed nation by 2047, we have a lot to do, because see, we don't have that international scale yet, and we are far away from that. Our largest bank, SBI, is not in the first 50 global banks. Our universities, the best universities, are not in the first 100. So these are the scales that we have to mount, and therefore it's not only the Indian context, but we have to, if we want to fulfill our dream, we have to scale up in a much bigger way, and that can happen by the established players who play the game by the rules, within the guardrail of rules. Because otherwise, if you ignore risks, if you have bad corporate governance, you may be the best bank today. Tomorrow, you can get into serious problem.
That's a wonderful point to end this part of the BT Best Banks NBFC award ceremony. We are leading into the actual award ceremony, but the final point that the chairman of the jury, Mr. Anand Kumar Sinha, made, and just to add to that, in a country where 800 million people are still required to be provided free food in some ways, not free in that sense, but necessary for their survival and improvement. In that country, the banking sector has to be far more healthier than perhaps elsewhere to ensure that not only financial inclusion happens, but India continues to grow in a very sustainable manner. Mr. Sinha, Mr. Mohapatra, Rajiv, Mr. Kannan, thank you very much for your time with us today. With that, it's a wrap. We'll be back with more. See you. Bye-bye.